What's the above-the-line deduction for tuition and fees?
The above the line, it's a tax phrase for on the first page of your 1040. It's called a tuition. It's a tuition and fees deduction. That that kind of competes with the HOPE credit. There are some situations, some tax situations, some family situations where it might be better to take the tuition and fees than the HOPE. I don't think that's the case with the American Opportunity Credit. I think the American Opportunity Credit just
Beats
wins
everything.
hand down.
Well, a big fun thing again for that was that because of raising the AGI phase out, so it makes it available again for many more people.
So yes, an advantage of the tuition and fees was that it didn't begin to be phased out until the 160,000. So if you got phased out of the HOPE credit, lifetime learning credit, then you could always look to that. Also, it does have some other benefits. It reduces your AGI, so that might help you with some other areas of your taxes.
So you might be able, for example, to get a deduction for medical expenses or miscellaneous itemized deductions that otherwise would be knocked out because of your AGI limit.
Yeah, so it has those benefits. And it also helps your state taxes as well.
Okay.
So.
All right. So here's where we're getting to the question area that I hear from so many families because they're trying to figure out, how do I play this game again? And that is specifically things like, should the family take steps for the student to be independent? And if the student is independent, will that make him or her eligible for financial aid when he or she otherwise wouldn't qualify?
Yes, we have to be careful here with regard to this word and concept of independence.
Okay.
When we're talking about financial aid, the government has a very, very strict definition of an independent student. Basically, to be an independent student, you have to be married, over age 24, going to graduate school. There's a few other things, but for most families who have a high school graduate going to college, they are not going to be independent in the financial aid system. So I just wanted to make that clear.
Yeah, because I've had a lot of people that say, well, the only way it seemed like we could get financial aid is for the student to file his own income tax return or her own income tax return, claim their own exemption. I'm not claiming them on my tax return.
Yeah, the government won't let the family off the hook until one of those previous conditions I mentioned is met. So till the student becomes 24 years old or something.
That's pretty old.
It's pretty tough. So the government expects the family to stand behind the student. However, that is with regard to financial aid. If we're talking about higher income families and financial aid isn't significant, then we don't have to worry about that, and we can talk about the student filing their own taxes and maybe even taking their personal exemption. Some
of these things are really a legal status too, though. So, like if the parents are eligible to take the student's exemption, that means that the student basically should be disqualified from taking that exemption themselves.
Two people can't take the same exemption.
Yeah, they can't both take it, and so sometimes some of these things actually are involved again, sort of with legal issues. So anyway, a good thing to think about it. And again, but the thing that it's knocked out for financial aid anyway, because the government is looking beyond. They're expecting the family to help out, I guess is what it boils down to.
So if you've got, and families will know if they filled out the financial aid forms and they got a high EFC number, something 10, 15, 20, 20,000 or whatever, they're not going to get financial aid, and they need to be looking at some of these tax strategies.
Okay.
There's a band in the middle which could go either way. You could actually try and get income down to increase financial aid, or you say, forget financial aid, there's more potential for me in managing my affairs so that I pay less taxes.
Okay.
But for high-income families, what we're talking about here is reducing the total family tax bill. So what we're looking at here is the family and the student, and they can be separate or they can be together. Mm-hmm. Which combination results in the biggest tax savings?
Okay. Let's talk a little bit about shifting income to the student. So is that a good idea to enable the family to get tax benefits, otherwise phased out based on income level? And if it does, then how can you shift that income?
Yeah. So that is what we're looking at here. In a situation, perhaps quite an easy example is if a family has an adjusted gross income in their tax return which is greater than the $180,000,
right.
That means that they don't qualify for this American Opportunity Grant.
Right.
That's $2,500 in tax savings is not to be lost.
Yes.
So what we would like to do there is have the student file their own taxes. And if they can do that and provide more than 50% of their own support, then they can claim that credit. So that is the kind of planning we're looking at here. We set the student up so that they have sufficient income, be it earned income or investment income, so that they owe taxes. And then we wipe out those taxes, first by the standard deduction of the student, and then by something like the American Opportunity Tax Credit or the HOPE credit.
Okay. So here comes one of the favorite areas of tax practitioners everywhere. What is the role of the kiddie tax in all of this?
The government tried to make it so that it wasn't totally easy for very wealthy people just to give a huge chunk of money to the child, so that the child got income off of that money and was able to pay their way through college at the child's very low tax rate. So they made the kiddie tax says that the child has to pay tax at the parent's tax rate over a certain threshold. But that's okay, that's true. But using that standard deduction and using those tax credits, you can wipe out a lot of tax. And even at some point, yes, the kiddie tax kicks in. You're not saving taxes at the same rate as before, mm-hmm. But you've already saved a good amount of money. Okay. It's worth doing.
Yeah. So you just need to be aware that it's there, and now it's been expanded. What is it, up to age 24 now, I think?
Yeah. So it's aimed to cover the child, while the government says the child's in the family from a point of view of.
And to go out that far, I mean, they've really gone to the extreme. And by the way, folks, California and some of the other states may not have conformed. So California, I believe, you're still subject to the kiddie tax just to age 13, and then when you turn 14, you're not. So it's kind of crazy. But just be aware that this is an issue for children's income tax returns, and this relates to their investment income. So this is like dividends, interest,
capital gains.
Capital gains.
I mean, the way to get out of the kiddie tax is to have more than 50% of your support through earned income. Mm-hmm. So what is support? So we know how much it costs to go to college, the cost of attendance. And college, say, is like 9 months of the year. So there'll be some extra cost that the family gives to the student to keep them the other 3 months. But let's say a college cost of attendance is $30,000 a year, and the other 3, it costs $7,000 to keep the child. That's $37,000 it costs for this child to live and do the college thing. Half of that is, what's that?
About 15,000. You said 30,000.
The 37.
37,000.
18,500.
Okay, 18,500.
So if the child can provide can earn more than 18,500, then kiddie tax is not an issue anymore. But that's very difficult unless you've got Michael Dell in a dorm room selling computers or something.
Well, and also though maybe the child can work in the family business, so that might be a way for them. In fact, for them to earn, you have to be able to actually justify it. But if they're actually working and earning, that's a possibility.
Business